And we're live. Phil Tarrant, Tom Panos, Real Estate Exposed, where we go behind the scenes, the big stories, the headlines, the scuttlebutt, the innuendo, the big issues, the small issues facing real estate professionals and the wider real estate ecosystem. Tom Panos, real estate trainer extraordinaire, the man behind the real estate gym, the fifth best auctioneer in Australia. How are you? How are you, mate?
Not bad, not bad. I actually don't even think I'd be the fifth. I reckon, probably
Come on,
top
mate.
10.
You be number one. You be number one. What's going on with the block, by the way?
Oh, well, the block's interesting because, believe it or not, I actually don't watch the block. I've never watched the show, right? I've never watched the show. But I got a text message from the two boys that I'm doing the block for, which is Omar and Oz. They're can I say it? Yeah, I can say it. I can't get in trouble. They're actually not, they're in Bali. They've gone to Bali and they're having a bit of a break with their families. But there was a scene in yesterday's show. Did you watch it?
No, mate. To be honest with you, I've been in an interstate for this week, and I've been getting home after cocktail functions with a short stop at the kebab store on the way back, sitting on the couch, and I, for the first time, watched the block for about 5 minutes, and then there was too many adverts, and I went, I can't deal with this anymore, and I turned it off.
All righty. No, I get it. Well, obviously, adverts is a very big part of the block, both not on the show, but also the marketing that they have on the show with materials that they promote and sponsorship. I actually met the owner of the block when I was there 2 weeks ago. Okay. The guy that, pretty much puts the money down, goes off, buys the blocks of land, then does the feasibility and make it work. And be interesting to see because, the market has changed now, Phil. And I think the land that they paid for it was around 13 mil, I think, right? And then so they've got to, work out and get the money back, but I'm sure it'll stack up. The scene yesterday was that one of the builders on the block, or the foreman, said to these two boys, some of your work's pretty shoddy. And they took it upon themselves. And there was I think one of the boys suggested that the guy was being, I think he used the words, you're picking on us because we're Lebanese boys, Muslim boys, right? And it was fascinating TV just watching it, because, and that's what the block does really well. It creates stories, you know what I mean? It's not just a renovation. It creates stories of each contestant. It was quite fascinating. It was really interesting watching this guy handle their objections in what they were saying, and I thought he did it. I thought he did it really well. I'm biased, Phil. I've gone to the block. I'm biased. I haven't seen the other properties, but I actually think they've got a very good chance of winning it. And the main reason is that if you can just picture, Phil, like you're at a country retreat at the moment. So these are country rural properties, but the one that they've got is they've got uninterrupted views with no one near them. And this matters to people when they buy a country property, because that's one of the attractions, is that, they feel like they've got all this land and that no one can look into them, and they've got space and it's their getaway. You can relate to that, can't you? I mean, because
absolutely. I get that. And that's going to be a key differentiator when it comes to auction day. When is auction day, Tom?
5th of November.
5th of November. Yeah. What's the look? I've seen the block only very briefly on TV, but I know they've deviated away from the traditional sort of inner city type stuff, and they've got 5 rural properties. I think they're all set on about 10 acres of land. I was actually reading a piece, and this is the interesting thing with rural retreats, COVID being an enabler for supporting change, and the area where the block is, it's about an hour and a bit out of Melbourne, from what I understand. And there's a lot of places like that in and around Sydney as well. And prices in those areas continue to rise and accelerate and buck the market trends. We're going to have a chat about, are we at the bottom of the market today? But a lot of these rural getaway for city people have continued to grow in price value over this sort of more lackluster growth period we've been seeing in real estate. But Tom, the report I saw said that the reserves, or what the expectation around what these properties will go for on the block for this season, is more than 4 times the median prices in those particular areas. So people, if they're buying those properties, will be buying absolutely at suburb records at the top of the top of the price point currently in those areas. But that's going to reset completely the price points in those particular areas. So those people that hold property there now are probably going to see a considerable uplift in their median price values and perceptions towards the value of the properties that are currently there. It's interesting how this works out, right?
Yeah, no, you're right. I was shocked because they're talking around 4.5 million, roughly. That's what these properties are going to go for. Thereabouts, could go for more. And you are right. That is significantly more than Gisborne is the place that they're being held. If you go on to realestate.com, you can have a look. There's hardly any properties that are at that price point. They're significantly lower. But this is one of the things that really benefits an area. It's a real event. Like you go there, you're driving, you're seeing nothing. You're seeing kangaroos on the road, and then all of a sudden you can just see, Channel 9, buses, cars, people there. So the rest of the area is going to benefit out of it, no question about it. Of course, Phil, this is quite different to the block over the last year or two, where the market's been red hot. This is a changing marketplace, and I think the land was acquired at a time when property prices were higher.
Yeah, and this is the game of real estate. But back to the point, Tom. You'll be the number one auctioneer, I hope, on auction day. It sounds as though you probably got the better bones in the actual land asset. It's just whether or not the guys have been able to produce a property which compares favourably to the other properties for auction and has the right appeal. A lot of it comes down to also when it's auctioned, right? Like whether it's the first one to be auctioned or the last one to be auctioned, because traditionally the first ones go up, that normally sell for more than the latter ones. I don't know what the psychology or science are. Do you know where you are in the order for auctioning off these properties?
I'm not sure, but I know that it is, and I don't think it's been decided, but there's an actual competition to that. And the order appears to be a big thing amongst the contestants. And what they're having a look at is they're using what has happened in the past as an indicator on who's got a bigger chance. Phil, I'm sort of, I'm not 100% convinced on a lot of things with auctions. Like a lot of people say to me, "Oh, what's the best auction strategy as a buyer to get it at a lower price?" Or, is it better if there's 2 properties that are being auctioned in the same street? Are you better off being the first one? Are you better off being the last one? There's pros and cons on both, whether being first and last. An example: if you're first, what will happen is often the buyer will hang back and say, well, this has gone too much. Maybe I'll get this one for a better price if I wait. Alternatively, what it is you might turn around and get carried away with the first one. So the vendor wants to be first to take that buyer out of the equation, that they're no longer there. It's too hard. There are so many variable factors. And in fact, last year, off the top of my head, it went the opposite way. And it went against the trend.
Have they got you locked up pretty watertight in some sort of confidentiality agreement? What is there a whole bunch of stuff you can't talk about when it comes to the block, or you pretty much, you go in on auction day and do the best you can?
Look, I think with most auctioneers, I think they're a little bit firmer with me. And the reason why is I think they know I've got a bigger audience, and so they have told me, please be careful. We don't want these photos being shown. When I was there, I've been there 2 times, and they said, we don't want these photos shown. These haven't been revealed as yet. We know you've got a big social media following. We want to be showing these. So there is a bit of that. On the day last year, they would feel they're super strict with video and phones. And of course, what a lot of people don't know, and I'm happy to share it, is that there is a delay between the auction and the result. And of course, there's paperwork signed there that you're not allowed to disclose, because Sunday night, well, you know what it's like, Phil. Commercials. You said it. They want to make sure that those people on the grand final night of the block are going to get lots of eyeballs, and lots of eyeballs means that don't spoil it before that. So there's spoiler.
And look, and giving adverts a hard time, I think advertising is really important. We're all big consumers, and I make a lot of my buying decisions from the adverts that I see, and it sort of puts new ideas there. But look, the fact that the block has been going for, it's got to be over a decade now. It's a show that really appeals to Australians. I think it really highlights the love affair most Australians have with property. Most Australians are dreamers when it comes to property, so they can sit there and, think about what they would do with their own home. And I think the block is a great enabler for supporting those changes. It's great for the product providers to show some of the great new products in terms of building material available, ways of building, which is a lot more modular, tech-driven, and you can move with speed. And I think a lot of people get a lot of great ideas out of it. Tom, I look forward to seeing you auctioneering, and mate, you got my vote as number 1 auctioneer in Australia. But let's see how we get on, Tom. Now, a couple of things, mate. I understand you've just been off the phone with my team at REB, chatting through the Reinnovate Summit, which is down in Melbourne in November. So we held this event in Sydney. You spoke at it. We're bringing it to Melbourne later this year. Tom, it's around technology. You're going to be talking mainly around the execution of smart tech. Tech's only as good as how you use it, and you could probably talk me through your attitude towards whether or not agents are good at using tech. I think a lot of them have a love affair with the next bit of tech, but they don't use it very well. You're going to drill down into this. Is that the brief with the team that you've just had?
Yeah. So that event's on the 25th of October, and it's in Melbourne. So just hit up REB if you want to attend that event. So I think, firstly, I applaud you, because there does need to be an event that's got a tech flavor to it, that's training and education. And the reason I say it is that a lot of the industry can really get sucked in to these digital companies that are coming out with products. And often the sales spiel is a lot bigger than the implementation spiel. And I often find that a lot of real estate clients feel actually have got an appetite for technology, except what they do is they go off, they buy it, they're paying the subscription fees, and you'll find that in terms of execution and implementation of it, it is very low. Sometimes somewhere between 0 and 10% on what it's capable of doing. And often what it means is that it's a short-lived relationship. People will stick with it for 6 to 12 months. Then they'll say, oh, man, it's too glitchy, doesn't work. So, I can't help it, Phil. The real estate agents that I see that are cutting it, that are smashing it, that are dominating it in a world post-COVID are the high-tech, high-touch agents, real estate agents that are using tech to not substitute them, to complement them and give them scale. And there's a lot of different parts of tech that are really good. If you've got a really good text messaging system, if you understand how to use artificial intelligence to allow you to have more targeted, intelligent prospecting, if you're able to actually use a lot of the social media products in an intelligent way that helps you retarget the right people, not having a shoot and pray strategy, you can actually devastate and dominate and be a digital dominator in your marketplace. But I'm not seeing enough of it. There is definitely a few clients across the country that have got this first move advantage and they're running with it. But the opportunity is, technology gives you scale. Technology gives you immediacy. Technology allows you to actually do more work with less labor.
Yeah, it's how you use technology. And we see it in our business, and everyone I speak to, they get frustrated with technology. Integrating new tech is hard. It takes time to do it properly, but the upside is huge. So thanks for joining Reinnovate in Melbourne, Tom, because you're one of the best out there in helping agents actually working out what tech you need and how to use it as an enabler to drive business growth and business effectiveness. And that's very much the focus from that. So that's on in October. You go to realestatebusiness.com.au, just or Google REB Renovate, and you can find it out. Now, Tom, a story on REB, I think it was yesterday. You might have some insights into it, because I saw it come through my social media feed when I was scrolling at the airport a little bit earlier today. McGrath has taken a investment inside of one of its own high-performing franchises up on the Central Coast. 30%, I believe. I think it's in Matt Steinway's business, and I believe you know him pretty well. This is a new strategy for McGrath to have sort of company-owned skin in the game in high-performing franchise outfits. What do you know about this?
Look, and it's funny you brought it up, because I was just doing work in another business that I got with McGrath today, and so I was with him, and I was meaning to ask, because I wasn't aware of it until I actually read it in REB yesterday. And I haven't spoken to Matt about it. Matt Steinway is one of the owners of those offices there on the Central Coast. But I'm just going to come up with my own conclusion, Phil, and that is John is very good at knowing when there is an upside opportunity. And I think he's got a lot of respect for Jamie and Matt, who are the two owners of that business. And he would have seen that he can actually add value to that being there. And for the record, Phil, Matt and Jamie are McGrath's first franchisees ever. They actually joined McGrath. I actually introduced Matt there, because I remember we were at a conference in Mascot and Matt was speaking and John was speaking. And I said, guys, maybe, hi, that's Matt, this and that. And they got talking. He was at Rain and Horn at the time. It was at the Stanford at Mascot. I remember it. And not too long after that, they actually became first franchisees. And McGrath's had not been structured to be a franchisor as yet. So it was pretty much a handshake agreement. They said, yeah. And Matt and Jamie, they were smart enough to know that the Central Coast had a big correlation with Sydney, eastern suburbs and the North Shore. So they saw the value in it. And I think that John McGrath sees the value of the connection between Sydney and the Central Coast. And that would be the reason that he's made the investment.
Yeah, well, it put my attention, and you see it inside of non-real estate franchise orientated businesses like McDonald's. McDonald's has company-owned, corporate-owned stores, and it has franchise-based stores, and I think also they may have sort of hybrids, or they use that as a way in which to strengthen their corporate capabilities. So maybe there's a lesson there, and I look forward to seeing how that pans out. It's a significant stake. It's a third, or thereabouts a third of that Central Coast franchise outfit. And I would imagine also there's a pretty good rent roll in there. So, just saw it, mate, and I thought I'd ask you about it. Now,
just one office. It's not just one office. They've got lots of offices there on the Central Coast. So it's not this one single real estate office that he's become a shareholder on. I would actually call it. It's a region. He's become a shareholder in a region of New South Wales. But John, talking about McGrath's, John's got a view, and I hold the same view. And Mark Burris, who I was doing a video with today, made reference to it. And that is, look, there is a feeling that if it's not the bottom of the market, it's close to it. And Mark Burris doesn't feel, he said to me, in all of his loan card, they have not got one distress sale. And he said the reason why is normally distress has got rising interest rates, but it's also got unemployment. And man, if people, Mark made a very good point, which is if people are struggling with repayments, which he sees no signs of, but he said, let's assume they're coming off fixed rates of 2% and going on to 4 or 5%. So they get impacted as they come off their 2 or 3 year fixed contract that they had. He said people just go off and work a second job and make the difference now. There is lots of work. There is no sign of distress selling at all. And the clearance rate has been over 60% in Sydney for 5 weeks in a row. My own auction numbers are close to 70% at the moment. There's this acceptance from buyers and sellers that this is the market. People, people already had factored in a 0.5% increase in October, and it ended up being less than that. People already factored in a 0.5% increase in November, and that may or may not eventuate. But it's not surprising stuff anymore, Phil. People have factored it in. And low unemployment means that people still feel okay.
Yeah, it's absolutely sentiment driven, but that's a good thing also. I'd probably add to that very considered commentary, and I do agree with you and those other commentators. Family balance sheets, Tom, are still very strong. People are further ahead of their mortgages than in any time in history, largely. People are able to weather these, for some of them would be seismic changes to the cash flow of the family budget, but there's no distress selling, and that's what's sustaining the market. Now, Tom, let's call it. Is it the bottom of the market? Let's you call it. I'm just the guy asking the questions.
Probably it's got a little bit more to go, but close. And I think if you're a buyer, whether you buy 5% before the bottom or 5% more than the bottom, it doesn't make a difference. If you're buying within a 5% region of that bottom, either side of it, Phil, you're okay, right? You're still, let's assume that you're buying 5% or 10% more than the bottom. You're still 20 to 30% ahead of a year ago. You need to remember that. You
do. And what are the telltale signs that we're at the bottom of the market, Tom?
More stronger bidding at auctions, higher clearance rate, larger number of people attending open for inspections. And this is the big one, Phil. A change in buyers' fear from overpaying to missing out on the area they want to buy because banks, through their borrowing system, are taking away the borrowing capacity of buyers. I want to give you a classic example of a buyer. He said to me, Tom, I'm spewing. I waited and waited knowing that the market was going to drop, and I was right. In the area I was looking at, it dropped $150,000. However, the bank reduced my borrowing ability by $250,000. So he had a limit to buy $2 million at the start of this year. His borrowing, because he didn't use it, has now been reduced to 1.5. It's a simple formula. For every 0.5% increase in rates, there's a 5% drop in borrowing capacity. So he's gone from having $2 million to now spending 1.5. So he said, I wanted to buy in Newtown. I've now been pushed towards Hurlston Park and Dulwich Hill for the kind of property. And this is a real thing. People that wanted to buy in Bankstown are now moving to Blacktown. And it's because there is no correlation between the price drop and the drop in borrowing capacity.
Yeah, I think you've articulated that very clearly. The old adage, if you snooze, you lose, Tom. If you can buy, if you're you've got a pre-approval, you've got the family budget in order, you've got your deposit sorted out, trying to call the bottom within a couple of percent, 5%, 10%, to your point, is largely folly, because what happens, the second and third order impact or effect of that is that you end up in that situation that you've just outlined there. Prices may come down, but your borrowing capacity is probably going to come down even further. So therefore, you're in a net loss position, and it's going to change the way in which you buy. Now, what may have changed, I think, a lot of people's attitudes towards buying is what's been happening, Tom, in Queensland. We've spoken about this. I've spoken ad nauseum about it over the last sort of 3 months, 4 months even. I was probably one of the first people out commentating around this when a lot of people didn't know about it, was those potential changes to land tax in Queensland. The idea being that if you owned property in Queensland that wasn't owner-occupied property, the Queensland government were going to tax you not only on the land you held in Queensland, but also all the property that you held in other parts of Australia. We've spoken about it. Thankfully and fortunately, we found out last Friday that that decision has been overturned. The Queensland government won't be implementing that particular tax, and largely the reason for it was, thankfully, common sense has prevailed, but it's because the other states, specifically New South Wales government, the Premier said, "What are you doing? No, you can't go about doing this. If it starts here, where's it going to stop? We're not participating. We're not going to sit by idly and let you implement this tax and impact Sydney or New South Wales investors." So fortune has favoured the property investor, Tom, and now I think already markets in Queensland are potentially, interest is changing from investors who may have been concerned about those changes and listing their properties up for sale. I must admit, I spoke with a number of agents around divesting assets that I hold in Queensland as investment properties. I won't be doing that now, but I had a real good look at it, and I was probably going to go down the pathway of decreasing the amount of assets I had in Queensland as a result of that tax. So this will change things for Queensland, and it's probably very good news for property investors. It's probably also very good news for tenants as well, because they would have been the key impacted factor in terms of rising rents for them, particularly in an environment of sort of growing inflation. So, Tom, common sense has prevailed.
Yeah, and it's quite interesting that during the same period that New South Wales is trying to look at, making it better and taking away some of the friction and taxes and duties for property people in New South Wales, that Queensland was going to do the exact opposite. And essentially what it would have done is it would have deterred people. And I know a lot of people, you're obviously one of those people, actually, when they're buying multiple properties, when they're buying their second or third investment, once they go past that threshold, they're looking at reducing the land tax that they've got to pay. And Queensland has been an area, so has Victoria, an area to spend, but Queensland's been a very attractive proposition, and that would have been devastating, I think, for the investors in Queensland and also for the real estate industry. So, I think Paraquet was very vocal about it. He was talking about not being able. I think I read he wasn't going to make the property information of the New South Wales residents available.
Well, the idea was that the investor had to disclose their other land holdings, and he was like, "Well, we're not going to do it."
Yeah.
I think everyone wins. It was absolutely just a gouge, just a tax grab. And look, if Queensland can't balance their books, there's some other ways they could probably work it out rather than imposing tax reform, which would have significant second, third, fourth order impacts on that economy. So we'll see how that plays out, Tom, but that's good news. I was happy to hear that, and no doubt it was a breath of relief for a lot of property investors out there who were talking to their accountants, getting a sense of what that bill was going to be for them. And I know a lot of property investors, it was going to be tens and tens and tens of thousands of dollars. So that's money in their back pocket. It's not a bad thing, mate.
Phil, let's finish on this. And I mean, I just really think right now, if anyone's watching or listening to this, whether they're using the podcast or getting the live stream, I think if you are a buyer now, Phil, and you've waited and waited, now is probably October, November, December, maybe January and February. It's coming to the end, particularly if you're in Sydney and Melbourne. It's coming to the end of about a year of price alignments. And if you've held back and you've held back, now's probably the time to say to yourself, okay, I'm now running into the risky ground where I can wake up one day and there's a mood, sentiment, and swing. Yes, there is a possibility it's going to drop another 5-10%. Not saying that. It may not sure. But what I am saying, Phil, is that I think right now is probably 6 months for people to go in and get something before things resume and there's more confidence in the market. I really, really, really believe that. And I think it's being witnessed now. I see it happening at auctions in the last 3 or 4 weeks. I think never underestimate the power of the public. They are the people. They can smell markets. They can see sentiment. Never underestimate them. And I got to tell you, I'm feeling really positive at the moment about real estate. And probably the main reason is the employment issue.
Yeah.
That's the main reason, Phil.
That gives a sense of the root health of the Australian economy, irrespective of the challenges, supply chain constraints, labour shortages. The unemployment rate is positive, and every single Australian that wants to work and wants to contribute and wants to participate has a job, mate. And it's not like that everywhere. So
no, we were walking through Byron Bay last week. I was there with one of my daughters. My daughter goes, walk this way. I hope the boss doesn't see me. And I go, what's that? She goes, they're always short-staffed here. He'll say, since you're here in Byron for 3-4 days, can you come out and help? I mean, there are jobs like right now. I mean, like employers are prospecting for staff, like left, right, and center. That is quite different. That is quite different, Phil, to when we've had price corrections and tough times in real estate like the GFC, where you've got unemployment as an issue.
Well, a lot to be thankful about, Tom. You've got to have an attitude of gratitude sometimes.
Yeah, could be worse. I reckon there'd be very, very few people that couldn't agree with the term, it could be worse. Like, don't get me wrong, there's a small group of people that probably right now it's pretty bad, right? But that's a really small percentage, It could be worse. Anyway, Phil, listen, enjoy. You've been on the road. You're back. We've got a pretty straight run now till Christmas. There's no holidays, no school holidays, no public holidays. We've got a straight run right till Christmas now.
It's good. I look forward to it, Tom, and whether they'll get more spring into the spring selling season. We can talk about that next week. I made my predictions in winter around a pretty slow spring selling season. I think I've probably got it right thus far. It may change moving forward.
No, that was not we. That was you. You actually said it. I remember it was 2 weeks before spring. You said, "Is this the spring that we're not going to have?" And it's actually it's transpired that way. It's transpired that way.
Yeah, it's good, mate. But I do enjoy catching up. And look, we're recording at a different time today. Thanks for being flexible, Tom. I'm not too sure how and when people would like us to get together, whether it normally works at a 12:30, 1 o'clock on a Thursday or a little bit later in the day. We can be flexible. If there's any feedback on that, please send it through to Tom. This is Real Estate Exposed. Phil Tarrant, Tom Panos. We'll see you again next time. Until then, bye-bye.
See you later, viewers. See you later, Phil.